All right, everybody. What is up? Let me just make sure the stream's working on my phone here. Don't want to go ahead and record and start moving stuff around on charts and nothing's recording. Let me just see. Day trader Brad. Yeah, we're all good. Okay, cool. Um, just gonna mute this on my phone here. Set that up, and we're good. Everybody, welcome to the channel. Tonight we're just gonna chill out and create a new system. I'm gonna back test the new system here for you guys, but we're gonna go ahead and create one from scratch. So it'll be kind of a full-on walkthrough of what it looks like to create a system, and then how it looks back testing a new system, and how you'll start off with very minimal rules. You'll be able to trade a broad range of the same setup, but nuances here and there between the setups. And overall, at the end of the back test or after X amount of trades in your back test, you'll be able to create refinements for that strategy. So we're going to be at the very, very starting point of what building a strategy actually looks like. So if we were to kind of draw a roadmap here, so A would be create rules. Okay. B, create management rules. So these are two things we need to identify right off the bat. And yes, my handwriting is super messy. My mouse sensitivity is too high to control. So forgive me, but that's something we're gonna have to work on. So the first thing we need to do is we need to create rules, more so structurally. So these rules are going to be based around the actual market structure, how candles look, moving averages, so on and so forth. Where the management rules will be once we enter a trade, how are we going to manage? Where are we going to take profits? When are we going to break even? How long are we going to let trade run, and so on. So, what I want to show you guys here is if you guys have ever seen any of my other backtesting videos, you guys will know that I use three. Actually, going to turn my mouse sensitivity down for this. 3 time frames. So I use a higher time frame, a medium time frame, and a lower time frame. And each one is rooted in the other. So these 3 time frames are all going to work together in the overall story. So my higher time frame, we're going to build out the rules here together. My higher time frame, I'm going to need to see an accumulation, meaning I want price to prove some sort of bullishness and have the ability to create an uptrend. And inside the uptrend of my higher time frame, in these points here, I'm going to go down to my medium time frame. So number 2, this will be my medium time frame, and I'm going to look for a specific model. And what you're going to see on the medium time frame is you're actually going to see price break down, consolidate, and then break upwards. So this, I'm actually going to make this red here. This schematic will happen inside these points here. And this is an important step in the overall story because it shows that the medium time frame is in alignment with the higher time frame. And once number 2, medium time frame, is in alignment with number 1, then we're able to make sure the third time frame, the lower time frame, is in alignment with the medium time frame, which would already be preset in the higher time frame. So what we do for that is these points here, we want to see the same thing play out. So in those points, we're going to want to watch price break down, go sideways, break through a base, break through a base, prove accumulation, and start a move up. And now that we've identified what our time frames have to do in order to be able to one, look for an entry criteria, we now have to identify the entry criteria we would like to enter on. So the entry criteria that I'm personally going to be testing for this back test or this live trading session with you guys that really isn't live. I'm doing it live, but I'm live testing previous action. We're going to have the entry, the lower time frame, which is also my entry time frame. We're going to have this break down, move sideways, and once it breaks above and creates this structure from here to here with a pullback. So the pullback's important. We are going to buy stop the high of this structure leg. And the stop is going to go below all the action of the breakdown and the consolidation. So the stop loss is going to go down all under this action that I'm underlining right now for you. If you guys take a second and screenshot this, if possible, I'll actually create a much better screenshot that you guys can kind of look back on. Can I create a page here? Mm, Let me just create new. Don't save. So one, we have a higher time frame. That higher time frame has moved into accumulation. Move it in simple terms, it's moving upwards. It's taken out all the previous downwards action, which would be this action right here. And it's broken above kind of a roof here and is now or potentially providing the opportunity to long the market. Now, in these points here, as previously described, on the medium time frame, we want to watch price break down, consolidate, and then push upwards, proving accumulation so that these time frames are aligned. And now the lower time frame, also known as the entry, we want the lower time frame to work with the medium time frame the same way the medium time frame works with the higher time frame. So in these areas here, we want to see price break down, consolidate. Sometimes the consolidation period doesn't take long. Sometimes price just breaks down and then breaks back up and goes. I like to personally see some sideways action. And once price breaks up on the entry or the lower time frame, we buy stop right here, the first structural leg, and our stop loss goes under all the action to the left. Okay. So this is the overall strategy we're going to be testing tonight. Um, I'm not in a rush to film this video. This is going to be a multi-hour long video. If you're here or you're watching this in the future, just chill. Screenshot this. Realize that everything I just showed you is pretty simple. Nothing's crazy so far. What we're going to do now is we're going to identify the time frames, right? Because we haven't actually put a time for the strategy, a time frames for the strategy. So the higher time frame, then we have the medium time frame, and then we have the lower time frame. So my higher time frame I want to be testing with is the 1 week. The medium time frame I'm going to be testing with is the 1 day. And then my lower time frame I'm going to be testing with is the 1 hour. Now, what you guys will learn in fractals is that you can use as many time frames as you want. So, for this strategy, you guys will see I put my lower time frame here as the 1 hour, but I'm actually going to use another lower time frame, which will be the 10-minute time frame. So, just imagine in this schematic right here that I drawn for you, you have another number, which is 4. And I'm going to use 4 as the same color as number 3 because all we're going to be doing is we're just going to replicate the same fractal that we've been doing one last time. So what does that mean? Well, I've told you that on the higher time frame, once accumulation breaks upwards, we're looking for in this area, we're looking for a breakdown and then accumulation to prove itself. Once accumulation proves itself, we want to zoom into this area here and we want to have price break down, consolidate, and then break through accumulation. Now, what I want to see in this area is I want price to break down again, consolidate, and then break up. And then this is where we would enter. And you can replicate that down as many times as you want. I will showcase that in the actual test, but just know that you don't have to limit yourself to one time frame, two time frames, three time frames. You can use as many time frames as you want. So these are going to be the time frames we're working with here. Okay. Now, let me make this even bigger. We're going to need some management rules. So we have the strategy, we have the schematic, we have the time frames we're going to be using. Now, I want to create some management rules. And I wish I made this black. Can I change it? No, it's not going to go. Change it. Boom. Management rules. So the management rules is going to be, let's make them up right here. So once we enter a trade here, let me go back to this. Once we enter the trade, this would be our entry. And then our stop loss would be here under all this previous action. I want to break even. So let's say my break even at 1 to 1. When do I want to take profit? Well, let's say I want to take profit. Let's say take 100% profit at 1 to 3. Now, management rules can go much further than this, but at its simplest form, this is what you're going to, or two things you need in your management system. You need to, one, know when you're going to break even, and then two, you need to know when you're going to take your profit because the trade is not over until you close the trade. So, meaning the profits you see that are floating are not yours until you close the trade. And this has to be part of the trade plan because if you don't have proper management rules that tell you when you're going to close the trade, then you have a faulty management system. You have a faulty trading system. You have a fault in your system. You need to identify how you're going to one, enter the trade, which is what we've just shown you here. And then you need to know how to protect and get out of the trade once you are in. So, this is the system we're going to be testing. So, you'll see here in the past 17 minutes, this is a built up system at a minor scale. Now, as we keep testing just these basic rules in front of us here, we can add, subtract, refine, and make things either much more simpler than what they even appear to be right now, or we could go down the rabbit hole and make things a little bit more complicated by eliminating a lot of the action that we are allowed to take, but ultimately makes it more simple because the less action you're allowed to take, the more specific thing you are looking for in order to be able to enter. So that just flew off a lot of your over a lot of your heads. We are going to complicate things by adding more entry criterias or more prerequisites we have to see in our trading setup, which ultimately is going to eliminate a lot of the action we're allowed to trade by needing more things to be met. But ultimately, that will make our system much more clear and simple because we have now eliminated a lot of things and are only looking for one specific thing, right? So, just to kind of show you guys what that looks like, or to explain that a little bit further, let me do this for you guys. Let's imagine these as marbles or just circles because that's what they are. What if I told you that you're only allowed to grab the blue marbles and anything else you can't touch? Well, if I told you you can only pick up the blue marbles, you're going to have much less marbles than what their overall is in the pile because you're only allowed to take one specific thing. Now, on the charts, you are going to see a million different setups, a million different things that could be viable or could potentially meet your rules or close to meeting your rules. And you're going to have to distinguish which ones you want to take and which ones you don't want to take. And back to what I was saying, when you identify more prerequisites in your entry criteria that you need to be met in order to take the trade, then you start to eliminate a lot of the things that show up. You no longer can look at certain things, and the things you are allowed to look at are actually much, much less. So, this is what we mean when it comes down to simplifying a system from what looks to be a pool. I guess you could call it a pool of, I don't know, forget I even said that. You guys get the point though. So let's exit paint. And now we're on the charts. So I think it's important that you guys can watch me trade with the rules in front of you here. So what I'm going to do for you guys is I'm going to write the rules here. So on my higher time frame, my weekly price needs to be clearly moving upwards after downwards price action to signal clear accumulation. My medium time frame, the 1 day, price needs to break down and move sideways until a break up that signals clear accumulation. And then on my lower time frame, my 1 hour, I need the exact same thing to happen on the 1 hour to the daily that the daily does inside the weekly. So I can simply just copy and paste that here. Now on my second lower time frame, price needs to break down, consolidate, move into accumulation, and once accumulation is validated, I enter off the first high that is created and put my stop loss below all action. Okay. Now I'll walk us through the steps here as they are met. But I'm actually gonna copy and paste this because this isn't a chart we're actually gonna be trading. Even though I could trade this here. Uh, Copy and paste that. Let's just go to something we know has been a crazy market. Let's go to Nvidia. Let's just like replay it here. Remove everything. Let's just trade this. Okay. So my higher time frame is a weekly time frame. And I can now put this back on the chart. Going to make this a little bit smaller. And then I think can I lock this in place? Anchor. Okay, cool. So my weekly time frame. Price needs to be clearly moving upwards after downwards price action. Well, price on the weekly had slight downwards action and now is currently moving upwards. Right? Price needs to be clearly moving upwards after downwards price action to signal clear accumulation. It accumulates past this point here. And we now have upwards or bullish moving price. And we expect it to do something like this. That's the overall expectation because we know once a trend is in motion, it wants to stay in motion. Even if it doesn't, that's what we're going to assume. So once the price is in motion, we treat it as it wants to continue. So I'm going to move down to my daily and let's see what we need for my daily rule to be met, which is my medium time frame. The 1 day price needs to break down. Okay. Well, we have a breakdown and move sideways until a breakup. Okay. Well, it breaks up, moves sideways down here, and then it breaks up. I'm going to get rid of this and creates this structure point here, pulls back. And now we're able inside here, if you remember the schematic we drew in the beginning, we're able to look down inside here for the lower time frame, the 1 hour, to start moving with the story of the higher time frame. So we kind of have ugly price action here. It's kind of just moving sideways in this area. I'm going to group everything here just so no one's confused. So that was my daily, that line there that I just clicked on here. That was my daily moving past the sideways price action, improving accumulation. And then this line here was that exact same thing on the weekly. See, that was the exact same thing on the weekly. This arrow was showcasing that. So was that. Then that's good. Okay, so back to the 1 hour price is kind of moving just in this sideways range here. Don't like it. I would want to see price action kind of move above here. Yep. Price doesn't, price fails down. And the daily here, it's below the moving averages. I don't really want to talk much about moving averages here, but on all my time frames, on the higher time frame, the medium time frame, and the lower time frame, I need price to be above the MAs for the most part. 99% of the time, price is above the MAs. So when price fails the MAs, like it's doing here, it's signaling that price is weak. And oftentimes, price will either move sideways or just fall into a complete downtrend. And I'll actually play this price action here so you can see that. Okay. So the beauty of that is that my expectation of the market didn't come into fruition and price did the exact opposite of what I would have expected it to do, which doesn't mean I'm wrong. Well, I was wrong, but it shows that you can't 100% be right. And certain things you look for in the chart are going to sometimes prove true and they're going to happen. And other times they're not. And that's where a lot of traders go wrong. They can't handle the ability to be wrong in the market from what their expectation previously was. It's such a big point because a lot of you guys are going to look at that and you're going to say or think that, oh, price just took off and he was telling me that it's most likely going to move sideways or fail here. This guy doesn't know what the hell he's talking about. But let me ask you guys, if I was trading this in a live market condition and I that was my expectation, would I have lost money in this market? No, I wouldn't have because my expectation didn't come into fruition. And when an expectation or what you're assuming will happen doesn't come or doesn't show itself in the market's hand isn't not in alignment with what you want to happen, then no trades were taken. And no trades would have been taken anyways if this market started failing. So very important there. Now we have price on the daily time frame taking off, but I don't want to look at it until I get a pause here because this leg here, where did my rectangle go? This leg is overextended, and I now want to see a pullback, which I don't seem to get. Price is creating a crazy run here. Oh, excuse me. And this is the first pullback we get right there. So here was actually an area where we were or could have been able to drop down and potentially found entries inside this pullback right there. Now we missed it, so I'm not going to go back and, pretend I didn't miss it. We did miss it, which is fine. But the entry would have looked something like this. So let's just see how that would have played out. Looks like it came down after paying about 7R, then comes down, sets up again. Gaps up over this sideways price action here, so there was nothing to do. This is heavy selling. I think this market is just going to fail like this, and then we can look for entries here. The daily's pretty extended too. So yeah, I probably just wouldn't touch this market. I'd probably wait until it just fails. Oh my god, Nvidia was crazy. So like this move here and this move here, more so this one was just a crazy, crazy strong move. This one is strong as well, but this one's a little bit more wicky. This one, pause, go, pause, go. The pauses here were a little bit more wicky, as you see right here and here. So that's what makes me think this price action down here was cleaner. But yeah, there's really nothing to do here for me. So I'm just gonna keep back testing this market here. What I probably want to see here, since the daily's so high up, I honestly probably want to see the daily like reset now. Yeah, it's just a takeaway market, and I'm not behind it because Well, my rules aren't met. You're not going to be behind every market, and that's okay. Let me ask you guys, how many traders can see a move like this and not freak out that they're not a part of it? And they start entering trades everywhere, anywhere and everywhere. How many traders? FOMO, greed, can't watch a market go without them, can't accept the fact that they don't know what the market wants to do at certain places, and they let them make the market feel like they don't know anything, even though they know all they need to know in order to extract money out the market. But this market can be so ruthless, it can extract the confidence right out of you. Whereas now I know that this market is pulling back here, and my expectation is that the market wants to now take out this high, because that's what bullish structure does. In bullish structure, markets liquidate highs. Whereas in this previous leg, yes, it took off in a crazy way. And this is something to screenshot on just how crazy a market can look like. This market went up like 120% just in this move here. And I wasn't a part of it. But now, since we have a pullback, we have clarity. And I want to trade clarity. So I'm going to look at my medium time frame rule, the 1 day. Price needs to break down. It's breaking down and move sideways until it break up. Okay, so let's wait until price moves sideways and we get a break up. Boom. Okay, fails back down on VMAs. So I'd wait again, and then boom, breaks up. So here's my breakup. And now after the breakup, I want to see a pullback happen. So I want to see a pullback to the rising averages where I can then drop down to my 1 hour time frame. 1 hour time frame breaks down, goes sideways. What I want to see is my 1 hour time frame break upwards. It breaks upwards here. MAs are slowly kind of rising. That's fine. Let's go down to the 10-minute time frame. And let's play it candle by candle. And let's see where I would enter. So I would enter right here. Kind of, I see this strong candle break past this here. And guys, I made a mistake in this lower second lower time frame. I don't enter off the first high. This is the system I knew I wanted to test before I actually even created this live YouTube video. This is actually my other system. I got the entry confused. So I enter, price needs to break down, consolidate, move into accumulation. And I enter once accumulation is validated. I enter off the break. The candle that breaks past the highs. So these highs here, the ones that have been struggling to break out, we call it a roof. So we can call it a roof. This is the candle here that breaks out past that roof. So that's actually the candle I enter off of for this strategy. Highlight that so everyone can see. Get rid of that. Make this a darker color. So boom, I enter here. My stop loss, and put my stop loss below all action. So all action, my stop loss would be down here. And I just let the trade go. And if you guys remember in the last screenshot, I deleted it. I shouldn't have deleted it. I'm going to take full profits at 1 to 3, and I'm going to break even at 1 to 1. So my break even will be at 1 to 1, which is right here. I don't touch the trade unless I hit my break even or the trade takes me out or I hit 3R profit. Okay, let's see what it does. Okay, so this would simply be a -1. And do I care? No, because one trade in a trading plan doesn't determine your profitability, but 100 trades will. So wait for a new break. I get a break past all this action here. So let me rewind this a bit. You'll kind of see how the thing that I'm looking for changes. So here, I'm going to get rid of this. This 1 hour structure looked good to me because it broke past all these highs to the left. So I entered my trade. But once price fails back down, I now want to see price come higher than these points here. Because I just feel like now that the general area of consolidation was at first this action. Now, since price kind of left it and then failed back down, I consider it all of this action. So I want my 1 hour here to sort of break past that, which it does right here. And then I would go down to my 10-minute time frame and I would have entered off this candle here because this candle is the candle that broke past this roof. So it breaks past the roof and I would be break even. So yeah, I always got to make sure with the strategy that I place my entry at the close of the candle. So 1 to 3, and then we'll just play it from here. Okay. So this would be a +3. So the first trade we took was a -1. This trade was a +3. So I will do this -1 +3 in the top right here. I'll anchor that so we can kind of see. And then we'll just keep the trade, or sorry, keep the markets going here. So boom, 1 hour has moved into accumulation. It's pushing bullish. So what I need here to follow this trend up, hopefully, because this is what we expect in a bullish market, an uptrend to continue before it fails and then recreates the same thing once again. I want to see a pullback where I can then enter. Let's see if we get the pullback. Boom, we get a pullback. Let's see if the 10-minute can create some sort of roof in amongst this area here. This would be my trade. Close that candle, stop loss below all highs. I would consider this the roof here because price kind of bounced off it a couple times. Then this is too low. This candle was really the candle that I feel took out all the previous highs. This is too low. I like kind of how the moving averages came played around here as well. So it's breaking out of this area where the moving averages and the candles previously played around in. So that would be my trade. That would be a -1. Nothing else to do. And that's the last area I would have looked at price because now price is failing. So we now know we're getting that daily pullback. This daily pullback should all be for the purpose of continuing this accumulation on the daily that is preset inside the weekly that we know is now in accumulation as well and hopefully wants to push forward or push up. And we assume that until price fails. So price proves accumulation, 10-minute time frame. We kind of have this roof right here. Price would have entered me in right here, stop loss below, and this would be my trade. And that would be a -1. Going to enter that in for the last trade as well. Price fails the averages. So I probably wouldn't touch this thing. Mm, Choppy, pretty choppy. Okay. Price jumps up here, which is fine. But I think it's important we look at this price action here. So in my other system, I have a rule where inside my 1 hour time frame, I'll only take one entry, and I kind of applied it here. It just helps me make sure I'm not taking too many trades in a potentially a bad area or an area where price doesn't want to take off. So that was the reasoning for kind of staying out of this action right here. Price broke down. If price on the 1 hour created some sort of high like this, I would have tried to enter in here, but price just like purely jumps into a crazy push. So I'm just gonna wait here, see what the 10 minutes doing. If I get a candle that breaks out past kind of here, I'll take a trade. Not good enough. I don't really like this candle, but it is breaking out, and I don't have set rules yet that tell me I shouldn't take a candle like this. So I'll just take it. Stop loss is a bit big, but like I said, we have the most the most basic rules right now that we're not looking to overcomplicate things or super refine. We're just looking to get a subset of data that we can then break down to see what worked best or what worked the worst. Okay. So my expectation is that this price wants to go after a big push on the 1 hour time frame. Obviously, this price can just fail down and take me out easily. I will not be defined by one trade, but I'll be defined by 100. Okay. So it does not matter if this breaks down and takes me out, blah, blah, blah. Okay. So price hits by 1 to 3 right here. And we now have another winning trade. So I can add it to this data +3. And why I like this trade is because the 1 hour was so strong. Like, look at the 1 hour, it just gaps into complete strength, comes down on the rising 10 moving average, and the 10-minute time frame breaks down. It breaks down, it consolidates, proves accumulation out of that consolidation. And once accumulation is validated, I enter off the candle that breaks past the highs. You see it here. This was the candle I entered on. This one right here. Move that. This one right here, the one my cursor's on, that broke past the highs. Okay. So boom, we took the trade and the trade proved it worked. Now this here on the daily, like this is super extended to me. It just looks extended. This can keep going, of course, but I don't know. Something about this just like looks like I probably won't get another move that's like this on it. But who knows? At the end of the day, this asset's moving crazy strong here. So I absolutely could. And to be honest, this price is in full delivery. So I won't even be surprised if I do get an entry here. Whether I take it, I don't know. Let me see here. So I see we're getting kind of like a base or a roof is forming. So I keep calling it base. I'm going to call it roof. A roof is forming right here. So let me get a candle that breaks past it, which this candle does break past it. Stop loss would go right there. and then this would be my trade. And that would be a -1. And I didn't like that trade to begin with just because it was overextended. But like I said, I don't have rules for the system yet that clearly define when a move is extended. By my own personal judgment, I probably wouldn't have touched that market. Um, yeah, I'm also not perfect though. Maybe you wouldn't have taken that trade. It honestly could have went though. Like, I don't see any reason why this market couldn't have done something like this. Now that does kind of look like a little abnormal on the daily. So yeah, probably should have waited. But all good. Now we're getting that daily pullback. Daily's taking off. All we're going to do now is wait for the 1 hour to prove accumulation, which it does right here. Go down to the 10-minute. We want price to break down. Breaks down. Sideways. I want to see a strong candle over this area right here. 1 to 3. Let's see if we get it. So price would be break even right here. So I'm risk free 1 to 1. Just going to leave it on there so I can see the risk to reward ratio. Then we're going to take profit at 3R. Boom. Take profits actually smashed. This thing keeps going. But we can add that to the data as +3. 3. And what you guys will start to see is the -1s I'm taking slowly begin to not matter. Because once I catch a couple of these +3s in a row, it eliminates all the losses fairly quickly. I'm only losing, per se, 1R, or that R in this case, let's call it 1% on each loss. Whereas on the winners, I'm gaining 3. So if you do the math, it works out to be R profitable or R positive. If I were to add up all these numbers, I would have a positive number. And that's what profitability, in a sense, is. So let's keep moving at this market. Now, this is an ugly, ugly candle. I would let price chop around for a bit here, 100%. This one's hard because from what I know, I probably would have sat out of this. But if you want to play the game of let's just take the entry because we don't have more refined rules to stay out of something like this, then this would be the entry, and then it would just end up in a -1. So I'll add that, even though this pullback was literally screaming at me that it wanted to just chop around. Like, that was a super ugly pullback. Yeah. Yeah, so I expect the 1 hour to just kind of chop around here. It looks like it's failing. It could still, for some reason it holds here. It could still deliver this, but it looks like it's going to fail. Okay. Now because of my rule where I can only take one entry inside a 1 hour structure point, I cannot be a part of this. But looks like it fails down anyways. So now we just have a lot of choppy price action. The 1 hour just looks like it wants to go sideways, and then looks like it breaks up. Oops. Let me be fair about this. I accidentally played price too quickly. I would have had an entry right here. Price kind of creates this roof, bounces off of it a couple times, and then this candle makes a break. Put my stop loss below the low. Aim for 1 to 3. I just let it go. It's a -1. I just put 1 when I actually put it on the chart because it's a little quicker than pressing the minus symbol. Okay, price fails down. We now have this sideways action on the 1 hour time frame. Looking for price to break out of that, and then potentially create another setup in here that I can be a part of for continuations. Price gives me that. 1 hour creates a roof. The candle that breaks past it though wicks heavily and then fails back down. And then this candle doesn't really pass it. So I'm probably looking for like a break above here. Now I'm looking for a break above here, just based off how the action looks. Looks like we've bounced off this area a couple times, creating this roof. And then we just get gapped. So there's not even an entry here. If there was, like, we could fill this gap in and pretend that this is a candle and like buy stop this candle. But my stop loss is just like way too big here. So when we get to refinement, you'll notice that this stop loss here is much different than every stop loss prior. So I can eliminate this entry because I can tell myself, okay, all my trades I've taken so far do not have a stop loss this big. And although all my rules are technically met here, because this stop loss is this big, I'm not going to end up taking the trade. And you just get rid of it. Nothing exists. Kind of have this. Sorry, I kind of replayed. Break above the MAs. Have this entry. Shoot for 1 to 3. I have no idea if this hits 1 to 3. I know it gets somewhere like around here. I'm going to take the trade regardless. And that would be a break even. So this is actually our first break even. Price reached 1 RR and then ends up tapping us out and then delivering. That's what price is going to do sometimes. It's part of the game. It's going to break even you and then end up hitting your TP right after. Who cares? It's actually about time that we got to break even. I want to see those break evens come through a little bit more. Okay. We got a nice pullback. price creates some sort of like floor, I guess here. I don't like when price looks like it breaks out with a wick and then another nice voluminous candle comes through beside the wick. I don't like that right off the bat. It just doesn't look right to me. So I'm going to consider this candle the breakout candle, and then I will take this trade here. So we're still in this trade. Break even has been met. Okay, so my break even is met here at 1 to 1. Now we're just kind of hoping this trade hits 1 to 3, or taps us out for break even. We're risk free, so we can't take a loss, which is best case scenario. And this price ends up taking off. So that ends up taking off. And you'll notice it actually had a much uglier delivery. So it kind of takes off, almost takes us out, chops around, and then breaks out again. This would have been another entry right around here, but we had already entered previously, so I'm not going to enter it again. But what we can take note is that this ends up being +3. So right now we've taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades. Good. Now this 1 hour just looks extended. So I'm probably gonna let the daily pull back here and the 1 hour to break down before we create the next leg up. Breaks down, plays around. Does the daily look bad? Daily fails. So we're actually in a weekly pullback now because that daily broke down and now it's moving sideways. So for my daily rule to be met, we need a breakup that signals clear accumulation from this sideways price action. So breaks up. Do we get a pullback? We get a pullback. And now we want the 1 hour to move sideways and then signal a break upwards, which we don't get. Daily continues to move sideways. And now it's in distribution. The weekly time frame is now in distribution as well. Broke past all M&As. M&As are starting to curve down. But it looks like it wants to deliver still. Fails down, breaks up. Now the daily can break down inside this 1 hour bullish range from here to here. Want the daily to move sideways and then push upwards to prove accumulation, which it looks like it's doing right here. Daily kind of failed down too much, and the weekly MAs turned sideways with this failure below them. So now I feel like we're still in this weekly sideways price action until we get a push upwards. Let's wait until we get that push upwards, or pushes sideways. We get the push upwards, pull back. Does the daily break down though? Because a pullback is useless if I don't see my daily break down. Daily does break down here slightly and then pushes back up, signaling strength. It doesn't push below the MAs at all, like barely. Daily gets that pullback. 1 hour time frame breaks down. I need some sort of sideways price action with a break upwards to start looking. Get that break upwards. 10-minute time frame right here. I get a floor breakout candle right here. Stop loss below all prior price actions to the left. 1 to 3 or 1 to 1 at break even. Play it. Does this hit 1 to 1? Nope. So we're still in this trade. It looks like it's about to tap me out for a loss. Let me make sure it's not a loss yet. That actually is a loss. My stop loss would be right here. So this is a -1. -1. 1 hour pushes. Again, eh, daily looks like it's in a pullback. Breaks down to the MAs. 1 hour can still go, but it needs to go here. Pushes. Big candle down. Let me see some sideways action. Should be sideways. Breakout here. Boom. 1 to 3. Oof. Almost takes me out. Pushes to 2.5. Then breaks me even. This is a 0. Price looks like it's starting to get a bit choppy here. So I don't really want to touch it. Break even. We're now at 12 trades, I believe. Daily looks like it's failing down here. So I know that weekly time frame is creating another pullback, similar to what it did here. We can expect to happen here. Boom. Some sort of variation of the sideways or sorry, the downwards, and then sideways price action. It's not always going to look the same. It almost a lot of times won't look the same. Sorry, guys, mental health break. Now, this pullback on the daily, it's super strong. Like, I just want to see some proof that this is going to hold here. And no, it just comes down even lower. So, yeah, daily's not looking the greatest here. Fails, fails. And yeah, I wouldn't even touch it here. Yeah, weekly now failed as well. Usually, when price is in a range, so let me mark it out for you guys. So, I was imagining price in this range on the weekly, like something like that. So, here, maybe it'll be easier if I draw it like this. That was my range from that low to this high. And price in this range that I was playing, it comes down as it should. It then gets above the MAs and looks like it wants to continue bullish, but then it fails again, which is okay. And it goes again, breaks above MAs, and fails again. So now I'm just thinking that price is just like chopping around in this area, and I wouldn't touch it until it cleared like all highs and showed just complete utter strength. Okay, price breaks up. Need that weekly pullback because that weekly pullback is going to prove to me that the daily has finally broken down, which I know it hasn't yet because I haven't gotten a clear pullback on the weekly. Once I do, though, like right here, I know that this daily, my medium time frame, has pushed down and is moving sideways. And I am looking for a clear sign of a break like this above the MAs where I can jump down to my 1 hour and look at the exact same thing on my lower time frame. Nope. So daily fails back down. Here we get a nice pullback. Just want to see what this looks like on the weekly. Looks good. 1 hour moving bearish, creates accumulation. 10-minute breaks down, creates a roof that we need to see get broken through right there. Breaks through, stop loss below all the lows. 1 to 3, smashed. This thing goes crazy. 7.9. But we were just looking for the +3 because that's what our rules said. And our rules tell us when to exit the trade. And any trade in floating profit is not ours because our rules weren't met to close the trade if it's still open. 1 hour, we're getting another pullback here. We can look to re-enter. Price is creating a little roof here. It does break through on this candle. So I'll probably do that. Put my stop loss here. 1 to 3. You'll see all my entries are the same. Oh my God. Does this take me out? Let's be honest, guys. Trading is about being honest with yourself. Oh my God, it does take me out, right? It's right on it. It's right on it. The worst. Because when it's right on it, we got to assume it's a loss. Because when the trade's actually placed with a broker, I truthfully don't know if that's going to take me out or not because I probably would have put my stop loss like right there where it tapped, which makes me believe it probably would take me out 99% of the time. So that's what we're going to go by. So this is going to be a -1. Done. And then the 1 hour just fails. Okay. We'll wait for the 1 hour to move into accumulation. Looks like it fails back, passed down. Daily looks like it's failing. Daily takes off. Need a pullback. This, like, I wouldn't trade this because I don't have a rule to trade gaps. I know one person that trades similar would imagine this gap as a candle and then enter with the assumption that this is where the candle ended. But like I don't see that yet, so I'm not going to implement that. Dailies failing MAs. Dailies moving sideways. Then price just now is almost in a context where you can actually start looking for an entry on the 10-minute. I don't really like this the look of this though, to be honest. Like it could deliver, but something about it doesn't look clean. So there we go, guys. Let's see, how much data did I backtest? About December 23rd, all of 2024, and 2025. So in 2 years on this asset, I had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 trades. So 352 times 2 years. I had 15 trades. So that's about one trade every 46 days. If assuming we're just trading this asset and this asset only. So in this system, we created rules, we set our time frames, we had management rules, and ultimately it led to what looks to be a profitable system. Let's, I guess, do the math here. Let me write down here though. One trade per 46 days on average. Then the math. So we have -1 plus 3, -2 plus 3, -1 plus 3 plus 3, -2 minus 0, break even, plus 3, and then fuck. I forgot where I was. Let's restart. -1 plus 3 minus 2 plus 3, -1 plus 3, -2, -0 plus 3, -1 plus 0 plus 3, -1. So we ended up being plus 7 RR, which is pretty damn good because assuming we had $100,000 and we were risking 1%, we would have made $7,000 just on this one asset over the 2 year span. Now, let's say we had a $1 million funded account. That would be $70,000 over 2 years, which would equate to $35,000 per year, which I think is the average salary in North America. Might be a bit higher than this. I'm not too sure. But since we're taking one trade per 46 days on average off this one asset, we can assume because we're traders and we hunt for the best assets possible is you're probably going to be looking at much more markets than just one, especially if you're on a higher time frame where things set up much less often and you need to look at much more markets to see which markets are setting up. So, if we were to take this, I guess, this data on one asset and just times everything by two. Let's say if we looked at Apple over the last 2 years, we would have got the same amount of trades. So about 14, 15 trades over the 2 years. This would then give us two trades, or sorry, one trade per 23 days if we cut that in half, assuming we're looking at two assets that were in great conditions. You will see how increasing the amount of assets will lead to more trades, but you will also see if you were to run the data on that, how looking at more assets than one, where you'll be able to get entries on one asset in a specific time that you won't be able to get entries on another asset. And that is the key to being able to screen for markets and be able to identify when a market is setting up and meeting your rules, because not all the time it's going to happen. If you guys see here on NVIDIA, I took trades in here, I took trades in here, but I missed every single trade inside here. And arguably, like the cleanest part of the move, besides down here. This was the cleanest part of the move, and I have no trades here because my rules said I need price to clearly move upwards after downwards on the weekly, which moves downwards and is clearly moving upwards here. But on my daily, I couldn't trade it until price breaks down, and price didn't break down until right here. So I missed this whole clean move. Not a lot of people would be okay with missing that whole clean move. And in this clean move here, if I was trading it, well, there's a good chance I probably would have ended up with, you know, two, three, four more trades in this data collection. Now, the important part is I didn't. And because I didn't trade this area doesn't mean I'm wrong. It actually means I'm right because I stuck to my rules. And anything that doesn't meet my rules is not for me. We made these rules for a reason. And that reason was to serve as a framework for what we are able to trade and things we are able to identify. Sure, I believe there are mistakes in here, probably. Like, I think the first trade or whatever, let me actually go check that because I actually think I used the wrong entry on one of the earlier trades because I got it confused with my other system. Can I not go back that far? Those are okay. That was okay. Would be somewhere in here. Oh, maybe I didn't. Maybe I caught that mistake before I even took a trade. Perfect. Now, the exciting part is, or maybe the not so exciting part, is I have to now put all of this data in my sheet, my data collection sheet, also known as my backtesting sheet, because this data isn't going to serve me any good if I just let it sit in this trading view platform where I'm going to forget about it. I'm not going to review it, and I'm just going to move on to the next asset. So that's what's going to happen. Now I have this here where I am going to input all of the data here with you guys, which is going to be super, super boring. But it's a Friday night, so who really cares? No one's doing anything important, right? We can just do this together and hang out all Friday night. I do need some water though. I'll survive. Now, this is a new sheet, so I do want to see if I can get rid of anything here. Like these, I think I'm going to get rid of. Don't think I'm going to use these columns, so I can delete that. Weekly, daily. I can get rid of this. And I can actually change this. So this would be my weekly, my daily, my 1 hour, my 10 minute. And then this would be a check mark box to see if everything met my overall plan. So that's good. I'm gonna delete one of these. I probably won't use two. Duration of trades and candles. I'll delete this. Don't care about that. I'll delete this. Okay, perfect. So I have a place for screenshots. So this will be all my screenshots. Um, kind of want to put that here. Weekly. Okay, cool. So I'm going to copy and paste my rules and put them in my trading plan. Let's put it right here for now. Your rules can really be as simple as this too. Like I probably will go into this and just clean up something minor here and there. But your rules can really be as simple as this, guys. Like nothing crazy. This is all super simple. If you were to write down this yourself and just abide by it, you'll be more than good. So I'm going to delete this, keep this. I'm going to go back where my first couple of trades were, and I'm actually going to count how many trades I took here. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Wow. 11 trades here. See, I might look back at this in the future and be like, okay, why did I take so many trades here? Like, I don't think that's, let me see on the 1 hour. Like, yeah, I took a lot of trades here, but to be fair, the market kept trending. So it's all good. Delete this data. Um, Validation will set on the cell. I like delete these. Error. Okay. So tired. Just copy and paste all that in there. What? I don't know what range I gotta put here. Well, I don't think I have any rules. No link button? I'm obviously not an Excel guy, okay? Show warning maybe? Maybe that one? This is pissing me off. I'm just trying to get it so I can like add screenshots, but I don't know why. Hmm. Super, super weird. I actually don't know how to fix this. Oh my god. Just trying to enter my data, bro. Got lots of data here to enter. Just let me enter it. Kidding me? Okay. I might have to just do this. Okay. Had to be done. Two. No. Boom. Boom. So this was labeled two because since the weekly went into accumulation, it made two highs. So the first range was here. First high got ran, then the second high was ran here. So all these trades were in the assumption that the second weekly high was going to get ran. So it looks like we have two trades on the first daily high after the accumulation, and then two more trades on the second one. So what I'll do here, so these ones would be one. These ones would be two. Just getting all the screenshots in right now, guys. Just of all these trades here before I enter in all the data. Just because data inputting is just super, super annoying. And it takes up a good amount of time. Second, and this one was also in the second. Oh my god. So two more in the second restricted. Okay, that's maybe something to look at that I don't like. And this one was taken in the third, 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 and the fourth. Okay, third, third. And then four were taken. And sorry, three more trades were taken running the fourth daily high. So this is one, two, three, four. And then in this fourth one, we had one, two, three trades taken. That's kind of how I identify or label so that when I come to my trades or the screenshots, I know exactly where these trades are taken. Just going to replay back here a bit. So I'm going to label these trades both as one because originally I thought this was the first break, the first high to be ran, and then it kind of like played around and failed below the MAs with these wicks, then created another one, this range. So I thought this would then be a new first high to be ran on the 1 hour. So I'm going to label that as one, and then the next one as one as well. Then this one up here would be two. Then the next one would be one. So I'll use the same screenshot for that next one. This would be 1. Next one would be 2. 1, 2. So it would be 1, 2, 1. 1, 2, 1. 1, 2. So 2, 3. Because this would have been a new breakup accumulation. This is first high, ran, second high, ran, third high. So these last two would be 2 and 3. Okay, perfect. So I know now on all these trades I took in this area, if I just click on, say, this one, for example, number 2, I know that it was the second daily high that I traded inside this range, which would be not this one, but this one. Fuck, I just closed it. There we go. So it looks like the first 3 trades were actually taken inside the first daily high. 1, 2, 3. The next one was second one. 1, 2, 3. Yep. Then it should be 3 and 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2. Okay, got it. Sometimes I mumble a lot to myself. Sometimes I think I get caught up in the feeling that you guys need to understand everything I'm doing, but I just need to work things out in my head sometimes by myself. And oftentimes, the things I'm working out aren't even important for you to know. So yeah, that's that. So I know, for example, if I took one of these trades in the third daily high, which was right here, I traded the first and the third 1 hour highs. First and the second, it says. For this one, since I don't enter off like a high or enter off in the expectation that a high is going to get ran because this would be my entry time frame, I buy stop the breakout of consolidation. So what I'm going to do on every screenshot is I'm just going to highlight the candle I bought on. Guess I'll just use blue. That works. So next would be this one. So what I'm doing, guys, is I'm marking the candle I entered off of and then taking a screenshot of my entry and how it played out. So that way I can go back in the future and study it and refine my rules. Maybe some entries I don't like how this didn't go sideways enough, and then this went sideways much more than this. I'm going to find my own personal preferences that work out to what I like seeing. Maybe instead of being broken even here, I choose to hold on for a little bit longer before I break even, right? And then this trade becomes a winner instead of a loser. So little nuances like that is why it's important to take screenshots, just so you have something to go back to. Sorry, I keep exiting out the wrong tab. I honestly don't care about the date. I'm just gonna delete this column. Time I almost care less about, but I'll record it. 14, 14. Okay, so two entries here happened exactly at 2 o'clock. So the reason I'm going to take down the time is because maybe I realize that a lot of my entries come in the afternoon time. Now, could that just be a coincidence? Absolutely. This one here, 3 o'clock. Okay. Now I can note that that one was a loser. Maybe entries past 3 o'clock don't work. This one was 12:30. So a lot of afternoon entries. This one was at 11. So that's the morning. Take that down. This one here was at 10:30. Another one in the morning. 10:30. A lot of this stuff is important because this data is going to create my rules later. 15:20. So that'd be 3:20. Not 3:30, 3:20. 14:40. 14:40. 15:10. Majority of my entries were in the afternoon so far. 13:20. And then this one was at 13:10. Okay, so I have all my times figured out here. Now I'm going to go back and record how big my stop loss was on each trade. Now, like I said earlier, I forget where it was. I think it was like somewhere here. I think it was here where I marked this trade out and we recognized that might have not been here, but I'll use this example where we recognize the stop loss here was much bigger than anywhere prior. So the reason I'm going to note down the amount of ticks or percentage or cents the stop loss, my average stop loss is is because I will know if my average stop loss on this asset is, say, 60 cents or a dollar or whatever it is, then I know that when I come across something that's much, much bigger, like for example, this $5, I know that this is a trade I would not take. So this is why I'm going to go back now and I'm going to take down the stop losses. So 88, 61, 0.88, 0.61, 0.96, 0.93, 0.96, 0.93. See, this one was a little bit bigger as well. This one ended up being a winner, but something to note, this stop loss was $2.74, which is like almost triple what my average stop loss is showing so far. So just something to take note of. This was $3.55. $3.55. So it's $2.60. It's $2.12. $1.72. 1.23, 2.51, 1.23, 2.51. So we have stop losses of all kind of sizes here. I'm not too worried about it right now. It's just something to take note of. Then by the time I have, say, 100 trades here for this new system that I've created here right in front of you, I'll be able to extract the trades and the specifics of each trade that I find consistent in a good way and keep them in my system and get rid of the stuff or the characteristics of maybe less good trades or trades that ended up more so in losses that showed consistent characteristics across the losses or certain characteristics that popped up in each loss that I can now get rid of and minimize the amount of data that I'm allowed to trade to ultimately make my system much, much more simple. And understanding the few things I must look for in this big pool of action where a lot of things are happening and a lot of things are valid. But me as a trader, I want to only look for one specific thing because I know in the market's consistency is what's going to breed profitability. And the longer I can stay consistent through discipline, through the same actions while looking for the same characteristics and understanding the same rule set is met over and over and over again, the farther it will take me. Okay. So RR secured. This one's simple. I'm just going to put in if the trade was a loss, win, or break even. I actually have it right here in front of me. So I'll go through them even though it's right here. So the first one was a -1. Next one was a +3. So -1. Sell accept numbers only. Well, that's not good if I need to put in -1. Okay, there we go. And then 3, -1, 3, then two more -1s. Two more -1s there. And it looks like we had +3, -1. So +3, -1. Then we had another +3 and two more -1s. So +3 and then two more -1s. And the last two was break even and a +3. Break even and a +3. Max RR. So this will be the max amount the trade ran. So let me put this in brackets. Max trade went. Fuck. before coming back and hitting my break even. Okay. So this really only matters for the winners. So I'm only going to fill it in for the winners, but this trade ran 3.5 and then this trade ran 4.2 and then this trade actually ran the best out of them all. So 13, 4.3, 3.6. So this trade ran 14. So this trade actually went longer because it didn't ever come back to break even. So 10. Then this one ran 3.7, 3.57 before it came back and hit break even. So that would be for this one here. Okay, perfect. Interesting. So on two of my three winners, they actually ran 210R or past 10R. So there was a lot of gains left on the table here, which is important to note because in the future, I can maybe create a potential rule that would allow me to stay in a move like this longer to be able to reach these higher take profit levels instead of, so I entered or exited the trade down here. And as you see where I exited the trade in the area, price actually ends up playing around and never touching my break even down here before it just completely takes off again to new heights. So yeah, important to note there. I am going to just go get some water real quick, and then I will come break down this section in my data sheet to y'all. So yeah, give me like 2 minutes. Okay, we are back, and I got a snack and water. Chocolate is very good. My phone's about to die, so let me plug it in. Can't reach my charger. Okay, so this part's pretty simple. You'll see that we have each time frame of my system laid out here. So all we're simply going to do is check mark if the rule was met, and if the rule was not met, then we'll highlight it red. So the first rule, this is my curve, by the way. Hmm. Are you kidding me? Is my data like broken? Okay, that's fine. I'll have to re-put all this into a new data sheet, most likely. Which is kind of annoying, but there's not much I can do about it. So yeah, I'll do that. But what I wanted to let you guys know is if I go back to my rules and I read it, so my weekly price needs to be clearly moving upwards after downwards price action to signal clear accumulation. If I go back to my weekly, price must be clearly moving up after downwards or sideways price action, like it does in this area and this area. So this would mean my trade rule is met for all of these trades here because price has pushed forward. It kind of goes sideways, a bit dips down a little bit, and then breaks back upwards and is in clear accumulation. So for these trades here, I can actually check off all the weeklies to be met. Now on my daily, I need price to break down and move sideways until a break up. So in this section here, where my weekly makes a pullback, I need my daily to break down like it does, breaks down, moves sideways for a bit, and then breaks up into a clear accumulation where all my trades were taken. So that rule was met. So I would simply check off all these boxes here as the rule was met. Cool. Now, my 1 hour for these trades here. Remember, my 1 hour rules is the same as my daily rules, just happening on a smaller fractal. So price moves down and then moves sideways for a bit here in this area, then breaks back up where this trade was met. Price doesn't deliver, goes sideways still in this area here, breaks up where this trade was met. So I can say that for the first two 1 hour trades or first two trades on the 1 hour, the rule was met. And then this third one came up a bit higher, but it was already moved out of this sideways price action into this clear accumulation. So this one was actually met as well. Price fails down below the averages, moves sideways for a bit here, and then breaks back up, signaling accumulation where the trade was taken. So this would be a trade that was met on the 1 hour. Now, an important thing to note is this sideways price action and this sideways price action do look different. So this was a very quick downwards movement with very minimal sideways action before it rebroke up, whereas this was a much more pronounced version of such. So what I will do is I can make a note on this trade that the 1 hour didn't move sideways long. And then afterwards, you see it does continue sideways before it then re-breaks up, makes this big move up away from all the sideways action, pulls back to the moving averages, and then takes off. So on this next trade, price was clearly moved into accumulation from that prior downwards and sideways action. So this rule is met, and then so was this rule on the 1 hour. Now, if you recall for this one, price on the daily was a bit extended. So I can make a note of that here, saying daily was a bit extended. Where if I notice that this seems to be a problem in the system, I can go back and change that. Just gonna see if I change that to anything. Does data populate? No. Okay. Okay. Price fails down on the 1 hour. We expect a little bit of sideways action to come through. Doesn't take long, similar to this one. This one here, price action doesn't dip down or move sideways long before it breaks back up. So what I'll do here, copy the same message and throw it down here. But ultimately, after price moved downwards and sideways, price rebroke up into accumulation, which ultimately does meet this rule. So we can mark it as the rules met. Okay. Now this was a pullback that was kind of wicky, but the 1 hour wasn't an accumulation, was an accumulation after this down move. So I can say the rule was met, but 1 hour pullback was wiki is the note I would write for that one. Sideways action happens, price breaks up, pulls back to the rising MAs where we expect price to do this, which from the trades, it does end up doing that, but not before it fails down first. But since this bullish push came into play after this sideways action, this rule on trade, this trade would be met. And then we get a break back down, sideways action, 1 hour breaks up, where these next two trades came into play, and clear accumulation, price moving upwards after this sideways action. So the rule on the 1 hour was met on those two as well. Now, the entry time frame, the rule is price needs to break down, consolidate, move into accumulation, and once accumulation is validated, I enter off the candle that breaks past the highs that is created, and I put my stop loss below all action. Okay, sideways price action. This candle breaks through, breaks past all these little highs. Stop loss below all action. The rule here was met. Sideways price action. Candle breaks out. Stop loss below. 10-minute rules met. Sideways price action, a little bit of a weirder one, but breakout candle happens. Stop loss below, met. Downwards action, a little bit of sideways creates a little high here. That bounces down. Just overall saw it coming out of this area in general. You can almost describe it as like a strong move away from the MAs, like the first strong move that pushes away from the MAs and gets above them. That's kind of the pattern I'm seeing here. Sideways, consolidation, breakout candle, stop loss below, sideways price action, breakout candle, stop loss below, sideways price action, breakout candle above these highs, stop loss below, rules met, sideways price action, breakout candle above the MAs and above this high. Looks like clean area to move upwards. Rules met. And on this trade, I'm noticing that the 10-minute did not move sideways for long. So entry, I'll put 10-minute did not move sideways long. Whereas if, was that the, okay, that was the third last one. Whereas you get sideways, breakout candle, sideways, breakout candle, pushing away from the MAs. Boom. So all the rules were met here in all the trades. That's not always the case. Sometimes you see here I have like red everywhere. Not everywhere, but in some spots. Because the rules weren't met and mistakes happen. But for this specific back test with these simple, vague rules we have, everything was actually met. And yeah, that would be us inputting the data from our back test in here. There are, I believe, two more trades. Yeah, these trades that aren't in the back test yet. For some reason, this data sheet doesn't want to produce the data here. So before I enter in all the other last two trades, I'm going to try and fix this. So that way I'm not wasting um, my time. Because, yeah, this is definitely a problem. And I don't know why it's doing this. Yeah. So give me a second. I'm actually probably going to copy this one. Copy. I'll name it this exact one too. Then I actually want to delete all this. Put these back. It's good. Symbol, date, time, stop loss are secured. I want to delete this one. XRR. Yeah, I have no idea how to fix this. I have no idea how to fix this. Ooh, do not disrupt the order, add or delete columns. All this data is spreadsheet. Hide the column if you don't need it. Fuck, that's what I did. Okay, hold on. Me. Yeah, the first thing, the number one thing I wasn't supposed to do. The data still didn't print.